Let me also welcome Aditya Agarwal, who's joining us on the show right now. Hi, Aditya. Firstly, help us with your take on Nifty Bank, rather, because that index is more volatile in today's trading session in comparison to Nifty 50. At one point in time, we did see the index drifting in the red as well. So, Aditya, which are the levels that you're watching out for Nifty Bank, and what sort of a move are you anticipating?
Hi, Srishti. Good afternoon. Thanks for having the show. It's more of a consolidation, I would say, both on the Nifty and the Bank Nifty between 56,000 on the upside to about 54,500 on the downside. While Bank Nifty does shows more promise as far as outperformance is concerned. But again, I'm keeping a close eye on the VIX. That is something which is still not at a comfortable position, which is not letting market go one way rally on the upside, which is why we are witnessing that kind of a volatility as well. So till the time the volatility index actually slides below the level of 16, my sense is we are going to see this kind of volatility continue in the equity markets, at least on the Nifty and the Bank Nifty both. But I don't see too much of a correction as well. So both the indices, I think, will remain locked in a range. If you're looking to go long on Bank Nifty, maybe look to go long closer to about 55,000 with a support at 54,500. And on the upside, you can see levels of 56,000. On the flip side, I think around 56,000, you will see profit taking again, and markets can slide gradually down to 54,500. So till the time VIX actually slides below the level of 16, I think, Srishti, this range is going to continue and markets will remain choppy and volatile within this range of 56,000 to about 54,500. For the Nifty, as far as is concerned, 25,100 to about 24,400 on the downside is the broader range in which I think Nifty will also continue to oscillate.
Just two stocks that I want to bring up for you on your screens. A, of course, Divi's has been quite the stupendous mover from the word go. They've announced another agreement with a global pharma company to supply advanced intermediaries. There's a capex investment of 6.5 to 7.5 billion rupees funded via phased advances from the customer itself. And remember, this is their second order win that they've seen so far this year. So the street is quite excited about that. On the flip side, there's Balkrishna Industries. While their results are, below estimates, what they've announced that's making the street a little cagey is the diversification. Into the passenger car radial segment and the truck and bus radial segment as well, even though the management noted that there are product-related synergies with the existing business, the street seems a little cautious about this extension. Narendra, how are you viewing these two pieces of news when it comes to both Balkrishna as well as Divi's?
Yeah, for Divi's, I think it's positive and definitely the results are also largely in line. And coming to the order win, I think we look positively forward for the company and it would also add to it. However, coming to the BKT, I think the new announcement which they have made is actually very low in margins front, and we believe that it would be dilutive of their operating margin as well as profit margin. Hence, we might see some multiples coming off a bit, which we might have also seen in the price reaction today. And going ahead, also, I think it would have some impact in deterioration of some profitability margins because of this. So definitely some premium multiple from out of maybe I can go off around 3 to 4x kind of things going ahead for the equity.
All right, but Narendra, since we are just talking about the tire space, give us some sense that what is your pecking order in this space? Because the reason I'm asking is because a lot of these experts do believe that the bottom for the margins are in place. Well, Balakrishna is in focus on the back of a separate news. But given the fall in the rubber prices and the anticipation ahead, the crude oil has cooled off. We have seen stocks like JK, CEAT, Apollo Tyres reacting to this particular news flow. So give us some sense that which are your top bets within the tire space and your favorites.
I think CEAT and Apollo are two preferred, and after that MRF is the second best for us.
We're holding on well to the gains right now in trade. Of course, dominantly it's autos, which is actually the leading pack in today's trading session. Everything from a Bajaj Auto to an M&M. Largely, those monsoon-sensitive stories are the ones which are taking the lead, or for that matter, even Hero MotoCorp. Also seeing some strength come in for the metals universe, JSW, Hindalco. These are also names which are looking good. Nestle, ITC as well, holding out well. So it's a good buoyancy that you're seeing in the market. The big drag, of course, continues to be Eternal. That stock is lower by almost 5% on the futures as we speak. In fact, I'm going to bring on board Varun as well and help us understand what these inflows are going to really mean. And, given that there is an estimated outflow because of its because of its weight reduction in both the MSCI as well as the FTSE, it's going to lead to outflows of about almost $840 million. And that's why you're seeing the stock as well weighing a little bit heavy because of that. But Aditya, help us on the charts of Eternal. Do you see it go close to 200 at all, or do you think it forms a base around the 220 mark, which has been quite the support for the stock?
Well, the trend is not that strong as we speak. The pullback was countered. It did face somewhere resistance around the 200 DMA. Bears did batter the stock around 250 odd levels, and 220 for now is a strong support area. But my doubt is how long this support area of 220 will hold. My sense is a matter of time before that 220 breaks, and you will see sub 200 levels on Eternal. A weak looking chart setup. If you already have the stock, maybe my suggestion will be to place a stop loss somewhere around 220 and continue to hold. If you're looking for a fresh entry in the stock, maybe wait it out for some more time.
All right, so that's the day coming in on Eternal, but let's get in more details on this particular counter. What actually moving the stock is the FTSE as well as MSCI. Both are expected to reduce the weightage on this particular counter. Let's go across to Varun for more details on this one.
Well, definitely, Eternal is down by around more than 4% today, and this is after falling 3% in the last week. Now, why is this fall? Because the stock is expected to see a sell-off of around outflows of around $840 million, and that is going to happen this week itself. And this is because FTSE and MSCI are reducing weight in the stock. This has happened because the company has actually got shareholders' approval to reduce the overall foreign ownership limit of the company from 100% to 49%, and this approval the company got last week. And after that, you have seen a sell-off in the stock, and now the sell-off is continuing because the outflows are going to happen. Now, why this is happening? Because if you look, there is a FL note which says that unlike headroom related reductions which are actually implemented in a phased manner, a direct foreign ownership limit cut may actually lead to a full investability weight reduction in a single step during the interim event. And because of this, there is this adjustment which is going to happen, the weight overall adjustment. On 27th of May, it is expected that around $380 million of selling is going to happen in the stock, and on 30th of May, around $460 million of outflow is expected in the stock. So the total comes to around $840 million of outflow that is going to happen in the stock because of the reduction in the foreign ownership. If you see from the 50-week high, the stock is already down more than 22%, and because of this sell-off, more pressure is expected on the stock, and that's the reason you're seeing after the sell-off of more than 3% last week, we are seeing a follow-up selling in the stock of around more than 4% in today's trade.
Right, okay, that's what explains the weakness in Eternal. Varun, thanks for that. Let's also get you the latest on JSW Steel. And the Apex Court has halted the liquidation of Bhushan Power and Steel, or BPSL. We caught up, in fact, with Sandeep Parekh as well, managing partner at FinSec Law Advisors on the matter. Let's hear out what he had to say and what the management as well told us.
I think it's a very good measure from the Supreme Court because I think the order itself was quite not just bad for JSW and the companies involved, but also quite disastrous for the entire insolvency process. And therefore, I'm glad that at least they've stayed their own order for the time being, which itself is a good step because usually when review petitions are filed, most people don't get relief. So I think it's a great step. I'm not saying that they're going to win at the end of it, but at least stay ensures that they don't need to unscramble the egg later.
The matter is sub judice and it's in the Supreme Court. So I will be able to give you whatever information I can. So one thing is that on the implementation of the plan, we have implemented the resolution plan as per the law and fully in compliance with the plan. That's number one. Number two is that we have revived the asset to where the asset is seen today with respect to volume and operational performance both. We have analyzed the matter with our legal advisors, and we believe we have strong grounds for looking at all the legal remedies, and we would be taking steps towards that. There is a process which you need to follow as per the agreement in the resolution plan, which had specified number of days. So it's a communication which needs to be followed. Basically, we have given that communication, also seeking more time to complete the entire process, and the legal remedies which we're talking about.
About JSW Steel, well, of course, Supreme Court has halted the liquidation of Bhushan Power and Steel pending the JSW review petition, and we also heard from the management. But Narendra, help us with your take on the whole news flow, because of late when this news kicked in, we have seen a lot of correction in stock of JSW Steel, but with today's action and today's verdict, give us some sense that what could be the next steps for the company, as well as what could be in store for the investors as well.
I think definitely the court case have added an uncertainty to the stock in the near term, and this is just a stay. So it's still we have to see how things pan out here. If you talk about the capacity, so this plant has almost around 12% kind of a share in terms of installed capacity, and was adding around 8 to 9% in terms of profitability. So if this comes out, then I think that kind of an impact JSW may have to take on. So almost about 9% kind of profitability impact would be there for the company. So things are still not clear, but definitely uncertainty for the stock, and I think we should see how things pan out, and then probably take a call.
Narendra, thanks so much for your time today. And glad that you could, join us today on the show. We'll take a very quick break. When we come back, we'll continue tracking markets with our chartists on board.
If you like this video, then like, share and subscribe to ET Now.